what's going on? This is Shocks and this is Shocks Capital YouTube channel. Welcome back. Today I want to talk about the concept of premium and discount and how can you use it to choose your order blocks, how can you use it to choose your points of interest, and how you can utilize this concept to make better trading decisions. And I'm going to show you a strategy that is in line with premium and discount that you can use on anything. And I'm also going to show you how you can use the Fibonacci retracement tool to identify these zones and to profit from the market using this simple ICT smart money concept. So guys, welcome back and let's get right into it. So what we need to understand when you are looking at premium and discount is the simple concept, or the thing is the most popular concept in trading: buy low, sell high. So what do we actually mean by buying low and selling high? It means that when price is oversold, it means that we need to buy, and when price is overbought, we need to sell. That's the concept. But how do you then practically apply it to your trading? This is where the concept of premium and discount comes into play. We need to understand that the buy low and buy sell concept is not only applied to overbought and oversold stuff, and we need to understand how to actually identify that without the use of an indicator, an RSI, or an oscillator. We need to understand what is being oversold and what is being overbought at any particular moment in price and time. Right. So this is a gold chart that I'm showing you here. This is gold. So what I need you to understand is, to understand the concept of premium and discount, you need to understand the concept of what? Of market structure. So number one, we have this base here, which is a peak, right? Then we have an impulse move, a corrective move, an impulse move, a corrective move. So once you understand that price moves in impulses and corrective moves, you need then to understand how to identify those particular segments in price movement. And by that I mean you need to understand the impulse. You need to differentiate the impulses from the corrective moves. Once you identify the impulses from the corrective moves, then you can move on to identify the ranges, right? So from what you are seeing here, you can clearly see that I have these blue horizontal lines that I have drawn on my chart there. So what I need you to understand is these blue lines, remember, they depict a low and a high. So we have a low, the first low, and the first high. Then we have the first low and the first high. Let me just delete all of them so that you understand what I'm talking about, right? So number one, we have this low, right? Then we have this high. So this on its own is what we call a range, right? So a range is from the high to the low, or from the low to the high. So this particular range is from a low to a high. Then we have another one where we have this new low and this new high, then which means this is a new range. Then we can continue like that, marking all the way to where price is currently trading at this particular moment, right? So what I need you to understand is we have this low and we have this high. This is a range. So when we say sell high, buy low, we need to understand that the low that we are referring to is the low of the range and the high of the range. You understand? So we identify a range, then we identify the low and the high, then we can make better decisions when it comes to buying low and selling high. What is the concept of premium and discount? Okay, let me give you a simple example before I explain what I need to explain. So all of you here have been or have sold something in your lives. If you have a product to sell, what would you expect? Would you expect to sell that product at a premium or at a discount? Right? So at a premium just means, loosely translated, just means you are selling at a profit or something like that. Then a discount, you are discounting, or you are reducing your profit factor or your margin, right? So that's what it means. So when you sell your product, you want to sell when the product is as expensive as possible. And when you are buying a product from someone, you want to buy that product when it's as cheap as possible, or when it is at a discount. And Same applies when you want to sell. You want to sell at a premium. So that's the same concept that you need to apply when you want to sell gold, when you want to sell Euro USD, when you want to sell everything that you want to sell. And with that being said, guys, I need you to understand that to do that, to do your selling and to do your buying, you need a very reliable broker. And for this particular one, we are trading with TIOmarkets, and TIOmarkets is a very good broker that you can use to trade anything from gold, stocks, from anything that you might think of, crypto, oil, everything that you want. And this broker offers unlimited leverage on a type of account that you need. And this broker is the lowest spread that I've seen in this market, and I've been around for a long time. And these are the advantages of using TIOmarkets. And if you would like to jump on and use TIOmarkets, the links are in the description down below. You can join us. So let's go back to the concept of what discount and premium. So once that has been established, what do we need to do? We need to understand that we have a range. How do we then identify the premium and the discount? It's very simple. You are going to identify that by the use of a Fibonacci retracement tool. How do you do that? If you draw your Fibonacci from the low to the high, you will get what you call a 50% zone. So that 50% zone is more like the equilibrium of the price. This is the middle of the range. When you get the middle of the range, you then understand that the top of the range is what you call premium. Lower part of the range is what you call discount. So the 50% level is going to show you where the discount and the premium is. And when you want to buy, you need to be in the discount area, which then means the order blocks that you are going to choose are going to be in the discount area too. So let me just remove these drawings and give you what you guys want to see, the Fibonacci retracement tool from the low to the high. So this is the high, and as you can see from this, the 0.5 level here, the green line is your equilibrium. You can as well remove all the lines and be left with 0 to 1 and the middle line. So once you have this, to remove clutter, you can as well maybe just draw a horizontal line like this and delete the fib. You are left with that. So it means that after doing that, you will know that this is your discount, this is your premium area, and this is your discount area. And what do you need to do with that? What you need is very simple. You need to understand that you have your equilibrium and you have a discount, but what you need to do is simple. You need to mark out your demand zone or your order block inside the discount area, so that you wait for price to go to this order block and go up, right? Same applies here, mid of the range. You mark your order blocks in this area, mid of the range. So when price changes direction, like what you're seeing here, mid of the range is here, your order blocks are here, right? So you are just going to avoid trading in the middle of the range, and you're just going to avoid trading trading in the premium when you're not supposed to do that. By that I mean you can't be buying in the premium zone and you can't be selling in the discount zone. You need to understand what level you are in and how best you can approach that particular level, right? So this is gold. And let's look at this, and let's draw out our Fibonacci here. See what this range gives us. So this is the range, right? This is the range. This is the 50% area, which means you could have taken this sell. Why? Because it's in the premium area, and remember, we are selling, and this is how you would have gone about it, right? So let's look at this one. This is a very, very recent example, and this is a live example. For those ones who say I don't show live examples, you are very lucky today. I'm going to show you and give you a signal. It's very unfortunate that by the time you see this, it would have gone, right? So this is 50% level, right? This is the 50% level, and at this point, this is where we have our order block, or this is where we have our supply zone, right? So we are going to be taking this sell and go down like this, because we are trading in the discount area and we are selling. So if you are selling in the discount area, it gives you a higher probability of your trade working out than if you are doing the opposite, or if you are trading in the middle of the range. So let me show you one last example so that you guys can internalize this and can apply it when you are trading. And remember, if you don't have a broker to trade with, we have TIOmarkets that you can use to trade. The links are in the description down below, and make sure you apply proper risk management when you are trading, right? So we have this one, and we have the 0.5 level here. So this being the 0.5 level, what are you going to see? You are going to say that since we are in an uptrend like this, as you are seeing, this is an uptrend. And what do you need to do? You need to understand that this, okay, let us draw a line on this one, right? Let's just draw a line to signify the equilibrium point, right? And delete this Fibonacci, right? So the equilibrium point is here, right? So after this, what do you need next? You need to identify what your order block. Your order block is here. So your order block is there. It's in the discount area. That's another, what do we call it? Confirmation or confluence that you can use the discount area, order block, and price traces nicely to it, throws a pin. And what you are doing is very simple. You're just going to enter your buy there, and your stop loss is going below the what structure or below the order block right there, and you are targeting this next one, this next high there. So this is what you are doing, and this is how you can apply the concept of supply and demand with premium and discount